Most economists say Fed's next move is rate cut. Nearly 40% of the 46 economists anticipated the central bank would act in July, while roughly 30% expected a rate cut in September. More than three-quarters of economists surveyed by the Wall Street Journal expect the Federal Reserve's next move will be to lower interest rates, which most expect to happen by the fall. That compares with roughly half who said in May they thought the next Fed rate adjustment would be a cut. But few see an imminent move. Just 2 of the 46 economists projecting a rate cut in this month's poll said they expected the Fed to lower rates at its next meeting, June 18 to 19. Nearly 40% of the 46 economists anticipated the central bank would act in July, while roughly 30% expected a rate cut in September. Fed officials have held their benchmark federal funds rate steady since December in a range between 2.25% and 2.5%. Economist Amy Crews Cutts, of AC Cutts & Associates, said she expected they would leave it unchanged until September and lower it then by a quarter percentage point to signal that the Fed is ready and willing to take action. Gregory Dacko, the chief U.S. economist for Oxford Economics, has the same forecast. He said, while the economy is in a good place and the Fed may succeed at guiding the economy to a slower growth rate without tipping it into recession, concerns about global manufacturing, the U.S. housing sector and possible ramifications should trade tensions re-emerge as a significant risk keep the specter of rate cuts on the horizon for the fall. On average, the economists expected the Fed funds rate will fall to 2.12% by the end of this year, and to 1.96% by the end of 2020, indicating they anticipate just one rate cut in 2019 and another next year. The longer they wait, the more they'll have to cut, said economist Robert Fry, of Robert Fry Economics LLC, who expects the Fed will reduce rates twice this year and hold them steady in 2020. Fed officials have begun deliberating whether to cut rates in coming months, if not next week then perhaps in July or later, amid escalating trade tensions, slowing global growth and signs of a cooling U.S. economy. A lackluster May employment report released last week could make it easier for them to justify a rate cut. Officials have signaled in recent weeks they are prepared to adjust their views of what is happening in the economy and change policy accordingly. We do not know how or when these trade issues will be resolved. Fed Chairman Jerome Powell said last week. We are closely monitoring the implications of these developments for the U.S. economic outlook and, as always, we will act as appropriate to sustain the expansion. Traders in futures markets have signaled a 22.5% probability of a rate cut at the Fed's June 18 to 19 meeting, and an 86% chance of at least one cut by its July 30 to 31 meeting, according to CME Group. The survey of 59 academic, business and financial economists was conducted from June 7 to June 11, though not every economist answered every question. Thanks for watching. Hope you enjoyed.